Okay, Assalamualaikum everyone. I would like to welcome everyone attending MMAC's third Tea Talk, Tax Returns Simplified. I hope everyone's ready with their tea to talk taxes. So before we start our main event, I would like to introduce myself. I'm Aisha Aziz, and I will be the moderator for tonight's event. And to start our event, I would like to welcome Adil Salman, our MMAC's VP Education, to introduce our speakers for the night.
Thank you, Aisha. Assalamu alaikum. Welcome, everyone. Thank you for joining on this sunny Saturday evening. I hope everyone can hear me properly. First of all, I just want to give a quick introduction about MMAC. I'm sure that everyone who's joined us already know about MMAC, but for those who don't know, Malayali Muslim Association of Canada, we cater not just to the Malayali Muslims here in Canada, but also our fellow family and friends in Canada and back in India. We are involved in cultural, social, religious, and charitable initiatives. You can find more about us on our website, malayalimuslims.ca. Now, these initiatives, of course, would not have been possible without the help of our generous sponsors. So for this event, we have 3 sponsors, 2 platinum and 1 gold. First and foremost, Manoj Karata, a real estate agent of Remax. So if you have any buying, selling, investing in real estate agent, he's the person to go to. I'm sure every Malayali knows about him. But we also have another platinum sponsor, GB John of Southern Realty Group. He's also a fellow Malayali and also is a real estate agent. You can go to him for all your real estate needs. And finally, we have gold sponsor Chris Lamana, barrister and solicitor. If you have any legal needs, especially with real estate law, she's the person to contact. So once again, thank you, sponsors, for your continued support. We are happy that you are there with us today. So coming back to the tea talk, I hope I won't take too much amount of time. So our community is like a mix, a vibrant mix of students, of families who recently immigrated to Canada. And of course, the families who have been here for a long time, second and third generation Canadians. But of course, no matter what stage you're at, taxes is one thing that is very important for all of us. So I'm hoping that with this session of Tea Talk, where we are going to be talking about taxes, I hope that each and every one of you can go back with at least a snippet of information that will help you in filing taxes and in your financial efforts. So to help us to talk about taxes, we have a very special guest, Evelyn Jacks, who is going to be our keynote speaker for today. Thank you, Evelyn, for joining us. Now, she will be introduced by Aisha in detail later on. But also to tackle our burning questions, we have 2 other wonderful panelists, Shaju Paul and Krishna Kumar, who is also there with us. Thank you, Shajata. Thank you, Krishnata, for joining us. I really want to take this opportunity to thank you once again for taking the time out of your busy schedule to be with us today. And of course, like last but not least, I want to thank each and every one of you, the audience. It's because of your continued support and involvement that MMAC is able to bring forth with more initiatives like this and to bring our community together. So thank you once again. So before I hand it over to Aisha to kickstart, like she said, I hope time kadikela ready anwala. So roughly translated, I hope you guys have it ready. So thank you once again. Over to you, Aisha.
Thank you so much. So as our VP Education mentioned, we have an amazing group of professionals here to answer all your tax doubts and questions. So without further ado, let's get started. We're going to start off with our keynote speaker, Evelyn Jacks, who is one of Canada's most prolific financial authors with over 50 books on a wide range of topics, including personal tax, family wealth management, etc. And she has served in Canada's Federal Task Force on financial literacy and is fluent in financial advising and policies. She's also been awarded the prestigious Rotman School of Business Canadian Woman Entrepreneur of the Year Award, Business Leadership Award, and has been named one of the top 25 women of influence in Canada. Evelyn is one of Canada's most prolific financial authors with over 50 books, like I already mentioned, including personal tax, family wealth management, and she's also influential in advising and commenting on tax and financial literacy policies. She served on Canada's Federal Task Force, Manitoba's Lower Tax Commission, and to advise on the direction of the province's tax program. Evelyn, if you could please join us. Hello.
Well, thank you so much for having me, and good evening, everyone. I certainly am honored that you have taken time out of your sunny Saturday to join us here tonight. And I've prepared a few remarks on just the essence of our tax system here in Canada. I can tell you that over 30 million people file a tax return every year, and 90% of them are filing those tax returns electronically, which is really quite a remarkable feat. The tax system communicates with more Canadians than any other department, and they do so largely digitally. So that's quite a modern way for people to use their tax system. Now, one of the first things you need to know about the Canadian tax system is that, first of all, it is based on self-assessment, which means the onus of proof is on you to report your income and deductions correctly. And I'll come back to that concept a little bit later when we talk about self-employment. In Canada also, our taxation system is based on residency, so not citizenship like we have in the United States, which means that as a resident of Canada, you have to report worldwide income in Canadian funds. And that is something that few people know and are sometimes surprised about. I'd like to also tell you that in Canada, many people file a tax return even if they have zero income. Why would you file a tax return with zero income? Well, it's because in Canada, we have a very lucrative system of refundable tax credits. So for example, even with little or no income, families that file a tax return can receive the Canada Child Benefit and the GST credit on the federal side. There are other provincial tax credits as well. And so it's really important. Concept number one is everyone should file a tax return. If you are an adult in Canada, if you are 18 and resident of Canada, you should also know that you can qualify to make contributions to a tax-free savings account. And I'll speak a little bit more about those tax-efficient accounts when we get to the next question about the right way to invest. And the last thing I'd like to say about our tax system is that we have certain deadlines. So if you are owing money to the tax department, you should always file by April 30th. Now, people who are unincorporated with proprietorships, small businesses, but not corporations, they will be reporting that income on their personal tax returns, and they will have until June 15th to file those tax returns. However, you should file by April 30th if you owe money, and most self-employed people will, because they contribute to the Canada Pension Plan on their own behalf. So general rule is filed by April 30th. You may also wonder, why do we have to file if we owe money, we don't owe money? Are there any other reasons to file? And the third reason, of course, is to get a tax refund. A tax refund happens in two ways. Number one, you're working and you had an over deduction of taxes right at source. You'll file to get a tax refund. But also, if you made quarterly installment payments during the year, because you have income sources that are not subject to withholding, then you may be subject to a refund because of an overpayment of installments. So I know I've thrown a lot of definitions your way, but hopefully that'll give you just a high-level overview of who should file, why you should file, and some of the nuances, some of the language behind our tax system.
Thank you so much, Evelyn. I think that really gave a really nice overview of what we're going to be talking about for the rest of the evening. So I think we have a few questions that we would like to ask you and gain your insight on. So the first one, as you may know, our audience today includes a lot of new immigrant families and students who wish to settle in Canada and continue their life here. And with any aspect of life, financial literacy and taxes are a vital part. So from your experience in personal finance, could you shed some pointers on what areas we should be paying attention to and thinking about when we think of taxes?
Yes, once you know those basics that I opened up with, then we can drill down a little bit deeper in terms of, for example, the kind of income sources that you have in Canada, because you don't, they're not all taxed alike. For example, employment income and pension income, we call those ordinary income sources because they are subject to taxes at specific income inclusion rates. In this case, 100% of an employment income and pension income is included in a calendar year, which is, of course, January until December. But there might be other income sources. For example, you might have capital gains in the year. That's when you sell an income-producing asset, such as a rental property. And when you've got a capital gain, you only have to include 50% of the net capital gain in income. It's also interesting that we have a couple of different types of financial investment accounts. When you have money in a non-registered account, for example, you might earn interest or dividends, and those income sources have different attributes as well. So income means different things on the tax return, and you might want to get some advice or learn a little bit more about your income sources and how they're taxed.
Thank you so much. And to not forget about our families that have been here for a while now, what in your opinions are areas that people easily miss out on when it comes to financial planning? Who might? Yeah.
Well, I want to say at the outset that when families members come over here, you may already have been in the country for a while, but when family members come over here, immigrants to Canada will have to prorate the basic personal and other amounts that we have on the tax return in the year of immigration. So that's an important consideration. And also, we have a tax-free zone for everyone here. It's called the basic personal amount. For most people, it's going to be $13,229. So that gives you a sense of sort of how much money you can make as an individual in order not to pay taxes. But if you are over the age of 65, for example, or a student, or have medical expenses or charitable donations, we have other personal amounts that you can look at on the tax return on page 4 and 5 and overview for yourself what you'll qualify for. Probably the biggest tip I can give you about financial planning is that it matters where the money is. So for example, if you make an RSP contribution, it's going to reduce your net income on the tax return, not just your taxable income. And when you make an RSP contribution, that could also increase refundable tax credits like the Canada Child Benefit. So it's always important to think about making an RSP contribution. To do so, you have to have earned income of the previous year. So if you missed making an RSP contribution this year, which the deadline was March 1st, look forward to saving for next year.
All right, thank you. So I know you mentioned a few resources in your answers. So I was wondering, what are some resources that we could go to for basic knowledge about taxes? I know your books are a great place, but what other resources would you suggest?
Well, I founded a school by the name of Knowledge Bureau, and we focus on providing financial education to people from all walks of life. In fact, we train people to actually get into the business of tax and preparation and bookkeeping. We help with continuing professional development for financial advisors. And as part of that service, we have a free newsletter, and it's called Knowledge Bureau Report. And what we do is we take a look at all the information that we have on the tax return, and we report. So when you go to our website, knowledgebureau.com, you'll see a green button in the right-hand corner. That's a good place for you to start. You'll receive an email newsletter, and it talks about tax changes and economic changes, and it'll help you understand the lingo a little bit better. And I would say it won't cost you anything. It's just a news service. And then after that, taking a basic tax course is always a great idea. Everyone should know the basics and how to run tax software, even if someone else is going to do it for you. And we can help you with that as well.
All right, I think we're getting to the end of our little session here, but I do know you have a 5th edition of your best-selling book, Make Sure It's Deductible, rolling out soon. So could you give us a little sneak peek about that?
Well, in there, we're speaking specifically to people who are going to be unincorporated, small business owners, or people who are entering the gig economy. You have a totally different relationship with CRA. You're subject to more audits because that's where that concept of self-assessment comes in. The government relies on you to properly report your income and your expenses, which break down into current expenses and capital expenses like the acquisition of a car. Also home office expenses. And those two are examples of restricted expenses. You'll have to make a distinction between personal and business use, for example. So the book is packed full of little tax gems like that, which will, with the theme being, make sure that every expenditure is tax deductible if you can possibly arrange your affairs within the framework of the law to pay the least amount of tax possible.
Okay. Thank you so much. So I think that wraps up our first session tonight. Are there any last remarks, tips that you would like to pass on to our audience? Anything you'd like them to know?
Well, I do want you to know there is no such thing as a stupid tax question. What's really important is that you probe and understand how the tax system affects you, because the tax system can be very generous to you, but it can also allow you to build wealth. So I do encourage you to learn more.
Thank you. Thank you, Evelyn. Thank you for all the insight and information that you've shared with us tonight. I'm sure the MMAC team and our audience learned much from you and appreciate all the time that you've spent with us, and we're honored to have you here tonight. So thank you again for joining us tonight.
It's been my pleasure.
Thank you. Hope you enjoy the rest of your day.
Thank you. Bye-bye, everyone.
Bye. So for the next section, I would like to invite our panelists for tonight, Shaju Paul and Krishna Kumar. Both of them have combined have more than 30 years of experience in the tax industry and are here to clear any doubts you may have. So now to introduce Mumbai, I would just like to say that if you have any questions, please feel free to put them on the chat box. They will reach me and I will ask them the questions. So before we start, I would just like to introduce our panelists. Shaju Paul has experience in taxation, finance, accounting, and has worked for medical and dentistry corporations, investment companies, IT companies, pharmacy, drugstores, professional corporations, law firms, restaurant, real estates, NGOs, and more. So clearly they all have a lot of experience, and he has prepared projected financial statements for bank loans, lenders, investors, and has worked with cross-border tax. He's a chartered professional accountant in Ontario and a certified public accountant in the US. And our other panelist, Krishna Kumar, is an accountant with over 20 years of finance, tax, and accounting experience, out of which 12 were exclusively in Canada as an accountant. And his areas of expertise are personal tax, corporation tax, bookkeeping, business, rental income, capital gains, CERB reporting, HST, T4, CRA audit, professional service, and even more. So I would like to welcome both of them to join us to answer our questions tonight. Hello, Shaju and Krishna. I hope both of you are really good today. Okay. So I think we can jump right in with our first question. This is towards Krishna Kumar. And the first question is, when should taxes be filed? And are there any benefits of filing them earlier? I think you are muted. Sorry. Okay, we're good.
Yeah, so Evelyn Parnamadre, we have to submit our tax returns before April 30th, every year, so that Canada Revenue can calculate our benefits before July 1st, and they start the benefits like GST credit and Trillium benefits. But before completing the tax return, you have to have all the slips, income slips that will come from your employer, then the bank and any other institutions for your consolidate and income before April 30th. If you owe any taxes to the government, that also should be paid before April 30th.
Okay, thank you so much. Any other question? I think it is directed towards Shaju Paul. So next question is, could you provide us with a brief summary of all the different types of income tax? So
Well, I think Krishnan can answer.
okay.
Yeah.
Whoever
Yeah.
wants to answer, I'm just directing it towards one of you. If any of you wants to answer, you can go ahead.
Am I muted? Okay. So personal tax are different. People are different types of people, right? So personal tax, and then business tax, professional income tax, corporation tax, trust income tax. There are various types of income taxes are there. So depending upon your situation, you have to choose whichever is appropriate for you. Then apart from that, international taxes. If you are a non-resident, you have to submit non-resident tax return. Then if you have a rented property here, you are a non-resident, but you have a rented property here, then you can submit a tax return, which is called Section 216. So depending upon your situation, you have to submit what type of income tax is suitable for you. So most likely 90% of the people will be submitting your personal income tax, which is T1 return. Yeah.
Okay, I think that nicely wraps up that question.
Okay.
Okay, next other question. Are there any free tax preparation clinics in Canada?
Yeah, so during the tax season, Canada Revenue Agency themselves open tax clinics. Then there are so many social organizations. They also open their tax clinics. The public can go there and they can do their tax returns freely. I don't think they will charge anything, but most of the cases, the simple taxes only they will take. The most of the cases, the students will be there. They are practicing students, so they may not go into complicated taxes and all. So for that, you have to go to a professional. But there are tax clinics which is really free for the public.
Okay. Since you mentioned student taxes, so
Yeah.
international students, do they have to pay income tax?
So international student, what happens is, as Evelyn said, here the tax is based on residency. Just because they are an international student, they don't have to pay any tax.
Okay.
But if they are doing some additional side jobs, like working with McDonald's or Tim Hortons, or doing skip delivery, then they may have additional income. In that case, they have to submit a tax return. Then there is one more critical thing is that you can report your tuition credit, whatever tuition you paid. Based on that, your tuition credit will be carried forward.
Okay.
So for carrying forward, you have to report the tax in the same year. Then you have to have it carried forward by CRA.
Okay.
Yeah. So that will help you once you get a full-time job. Then you can get more refund.
Okay. I'm sure that answered doubt
Especially the students will be interested to hear that.
Yes, for sure.
Well, one more thing I want to point out.
Yes, I was just going to ask you if you had anything.
Well, related to the same question. Well, if some people, when they go for citizenship or any immigration problems, or if they go to an immigration lawyer, most likely immigration lawyer will ask you to bring the proof of tax filing. The tax filing document is a very valid proof that you've been in this country and you've been a resident and you've been compliant with everything. So that's very recommended. Even if you don't have any income, I recommend everybody, in addition to the benefits that Krishnan mentioned, you should be filing the taxes in this country.
And especially when you go for later stage in the life, when you go for a property, then you have to take a mortgage. They definitely need notice of assessment. For that, you have to submit a tax return.
Okay.
Then there are various things like RRSP, contribution to RRSP, investments. So all these cases, you should have tax returns filed.
Okay, I think that answers that question. Any ആർക്കെങ്കിലും ഇതിനെ പറ്റി question ഉണ്ടെങ്കിൽ please leave them in the chat and I can ask them after the next question or after the next few questions. Okay, I think next question is for Shaju Paul. So how do the COVID-19 benefits like CERB or CESB impact income tax return?
Well, individuals received SERB benefits. They need to pay back all the tax liability before April 2022. That's the timeline government has given, provided if they file their income taxes before April 2021, that is this year.
Okay.
That means you should be filing your taxes on time. Don't hold on to that, okay? But you have the time, one more year to pay back the penalties or any amount which you received, which you think you don't deserve that. Okay, you have one more year to pay back, but you don't have time to file. You need to file it this year.
Okay.
Yeah, the main eligibility criteria for paying the deferred income tax is filing the income tax return by before April 30, 2021 for the amount you received SERP or any other benefits that you received on account of COVID.
I'm sure that information കുറെ ആൾക്കാർക്ക് ഭയങ്കര value
അത്
ആയിട്ടുണ്ടായിരിക്കും.
വളരെ critical ആണ്.
Yeah.
Then only you will get the extended time for paying the income tax. Otherwise, you are liable to pay by April 30th.
Yes, for sure. I mean, നമ്മുടെ COVID and the topic related, I think we have a few more questions about it. So are there any extensions or payment arrangements for individuals that currently have a hard time paying it back? I know you've mentioned that we have to file it by April 13th, but is there anything else, like any other arrangements there to pay back anything they received during the COVID relief benefit?
Is there anything, Shaju?
Well, apart from this, the timeline that government has given, I'm not aware of any other arrangements.
Yeah.
But if you run into trouble or if you find financial difficulty in paying back, you can always call CRA and leave a message in their system. I'll be paying back in the next couple of months at so and so X amount of dollars. So that gives an indication to the CRA that this person intends to pay it back within the next 6 months or 12 months or X amount of time, if that falls within the parameters of CRA. So I would recommend please call CRA if you find if you have financial difficulty in paying back immediately. Is that answers your question?
Yes. I hope it does, whoever had asked it. And yeah, the question is, I'm a full-time employee and worked remotely last year. So can I claim a deduction for my house rent and utilities?
That is for whom? For me or?
Full-time employee?
I think, sorry, I forgot to mention it was for Shajapal. That was my bad.
Okay, so can you repeat that question? There is a full-time employee is asking whether they could.
A full-time employee and they worked remotely last year. So they're asking if they can claim a deduction for their house rent or utilities.
Yes, there are two different ways. Everybody knows last year in 2020, at least, since March 15, everybody was working from home. And the government acknowledges it, and they know that, and they came up with a couple of plans, couple of benefits in terms like everybody will get $400 of benefit working from home if they had to work from home, if their employer asked them to work from home. Imagine a security watchman, he doesn't have to work from home. Okay, don't think that he can claim this benefit. Yeah. And again, if employer asks you to work from home, they can get a maximum of $400, which is a very simplified method. And if that person thinks more than $400, he wants to go for a detailed method, he can do that. He can claim rental or internet, home office or whatever may be things. He can claim, provided he should get a form called T2200 signed by his employer. If he has that form, definitely he can go for a detailed method. He can claim more.
Otherwise, it is $200, 200 days, maximum working days, not Saturday, Sunday, and holidays. So $200 times $2 per day. That is the way $400 is calculated. That is the simplified method. Then you can claim that deduction.
All right. Thank you so much for explaining both. And
Yeah.
I think then the last COVID related question. So last question about COVID is, where do you receive tax slip forms, especially the COVID-19 relief receipts? This was for Krishna Kumar.
Yeah. So government has already sent out the COVID relief related slips before February 29th. So they have issued T4A, which everyone must have received already. If you misplace that document, you can go to your tax accountant if you have one, or you can give a call to CRA, and they will give you they will send you a T4A slip in the mail. So there are multiple ways where you can get the slip.
All right.
Based on that only you can do your income tax return.
Okay. Thank you so much. I think that concludes all COVID related questions. And COVID related questions ending, please leave them in the chat and I can ask more. Our next question is for Shaju Paul. So it is it practical to use the spousal loan strategy for employees with unemployed spouses? Please advise on how it can be applied.
Okay, I was a bit confused about that question, the way it is asked.
Yeah.
Since for an employed person, he cannot split the income with his spouse.
Okay.
I thought maybe this person is having a corporation, he's a businessman, and he's planning to split some income. Again, splitting income, is it allowed? Yes, it is allowed up to a certain extent, but CRA is tracking that. For the last 2-3 years, they came up with a lot of new strategies to track split income. But if he is having a corporation, well, he can put his wife, unemployed wife, spouse, into the corporation as an employee, and he can give the payroll. Okay, he or she can be on the payroll, no problem in doing that. But I don't know what is the question talking about loan arrangement. I don't think there's such a thing, but shareholders, of course, they can get loan, but it comes with a lot of conditions, but not spouse.
Okay. I hope whoever asked the question, I hope that answers it. The answer statement, please feel free to type like a better version of it so that it can be better answered. I think we have got live questions, so we can get started with those. What are the pros and cons of filing through TurboTax or any other online software? Either of you can take this. It's not specified to.
TurboTax?
Yes. What are the
Shaju
pros?
is experiencing TurboTax.
There are many softwares available. I'm not saying TurboTax is bad. All the softwares are certified by CRA, and all certified softwares are good. It's like a car. All the cars are good, but you should know how to drive the car.
Right.
Software is good. TurboTax is good, and any software is good. If that person knows how to do the tax return properly, and if he knows how to claim the credits properly, of course, he should go ahead and do that.
Okay.
That's the problem.
We are here to help you.
When you are doing your tax yourself, if you don't check mark one box, then probably you will lose a lot of credits. So you have to be very sure that you know everything, how to use the software professionally.
All right. I think that answers their TurboTax question. And the other question is, could you talk about tax implications of getting US income while residing in Canada? Then they're given two scenarios, so I'll say both. So the first scenario on the being a full-time employee and paying US taxes. And second is they're a contractor and not paying US taxes. I can repeat the question.
Shaju, you want to attempt?
Yeah. Can you repeat that question one more time?
Yes. So tax implications of getting US income while being in Canada for two scenarios. One is that they're a full-time employee, but they're paying US taxes. And the second is when they're a contractor and not paying US taxes.
Okay. I deal with this every day because, I'm specialized in cross-border tax planning too. But the thing is, if he had paid taxes on his employment in America, in US, America issues a slip called W-2. That is similar to the T4 in Canada. And you have to look into the T4 or W-2 slip. If the tax is being deducted, he will have to file taxes. He will have to file tax return probably in America. And since he is a resident of Canada, he has to report worldwide income in Canada too. But that doesn't mean he has to pay taxes in both countries. There is no double taxation. And especially there is tax treaty between US and Canada. So whatever the taxes he paid in USA can be claimed in Canada as foreign tax credit. But it's a bit complicated. You should know how to do that. And again, I'm telling you, you are not going to get a dollar to dollar credit in Canada. Because of a couple of reasons, he will end up paying taxes in Canada, although he paid some taxes in USA. There are reasons behind it if he is unemployed. And similarly, if he is a contractor physically present, performing the duty while he is a resident of Canada, but he is getting income from USA. I do have a couple of clients like that. So I don't know whether is that person is a self-employed contractor. Is it the first scenario he was I think he is employed, and second scenario is a contractor, right? If it is coming through a corporation, of course he will have to file corporate tax return in Canada. And if he is not, the income is not coming through a corporation, if he is self-employed, again, the income should be reported to personal tax business return.
Okay, I think it sounds like it answered the question. So any other question is, I over contributed to Rrsp. I realized within a few weeks and withdrew the excess. However, a certain part of my withdrawal amount was held back by CRA under the title income tax withheld. How do I claim the amount back? Dahil kayo money.
So if there is a RRSP over contribution, there is a limit for, first of all, there is a limit for RRSP contribution. You have to see your previous year income tax return where they would have given the RRSP contribution room for the next year. So always you have to restrict your contributions within that limit. By mistake, if you over contributed, then you have to submit another tax return called T1 OVP and file a T1 OVP is called a return and claim a refund. So you have to go to your financial institution and claim, withdraw that money from the this one from the finance bank, then submit a tax return called T1 OVP, and the deduction can be claimed in the subsequent tax return. So that is the way you have to normalize your RRSP over contribution. So hope it helps.
I think that should have answered it. While the other live questions are rolling in, we have a few that have already been submitted. So I'm going to go back and go through them. So next question is, I'm currently on a work permit in Toronto. I have 2 houses for sublease. One I have covering my rent and utilities. The other I make a profit. I have made profits in the year 2021, but not in 2020. Would this be a tax concern for me? I think this is directed towards Shaju.
Shaju, yeah.
Well, the question, when he used the word sublease, and I was thinking, it could be like, I know so many international students are living together in a rented apartment, and they are not directly leasing the apartment from the landlord. There is always a middleman. For example, Mr. A leases the apartment from the landlord, and he is subletting to many international students, 5 or 3 or an X amount of people are living there, and he's getting rent from the students. I hope this is what he meant by subleasing. And if he's doing that, he's getting rental income. And of course, there is expense, he is paying rent to the landlord too. And if there is any surplus, he has to pay tax to the government. And that will be reported to a rental return of his personal tax.
Okay.
It's called T776.
776.
It's like a rental activity. I hope this is what he meant.
I really hope that's what he meant. Adalingil, please, again, mention it in the chat and I will re-ask your question. Any next question on the DIB? How is my capital gain or share investments treated? This is to Krishna Kumar.
Yeah. So capital gain in Canada is reported as 50% taxable capital gain. That means if you have an asset, let's say for $100, you bought an asset and you sold it for $150. So there is a $50 profit, out of which $25 is taxable. So that is called a taxable capital gain. And you pay tax. So with your regular income, you add this $25 in our example, and you pay tax based on your tax rate. So that means $150 you sold something and you pay your tax maybe $10. So remaining $140 is your profit. So from $50 profit, you make $40 tax free. Like that it is calculated.
Okay, thank you so much. Any next question on the DIB? If you're self-employed, is it better to take dividends or salary? That is, let's say if we take 30,000 as dividend or 30K as annual salary, for which one do we have to pay more taxes? This is towards Shajipal.
Well, there was a time the dividend was cheaper than payroll, but the last couple of years, government is trying to streamline those and trying to what we call pay the same amount of taxes whether income comes through dividend or through payroll. So end of the day, at the bottom line, most likely the result will be almost same. However, I would recommend people to go on payroll because of a couple of other reasons. Number one, they can get working income tax benefit. And while they are on payroll, they are contributing CPP, and once they retire, they can have a Canada pension plan. If they go through the dividend stream, they won't get any pension benefits. Another reason, if they're having young children, and if the children go to the daycare center, they can claim child care deduction too, if they are on payroll. But if they are on dividend, they won't get that benefit. So because of all these benefits, I would recommend always to go on payroll.
Okay, I'm sure they'll take your advice and payroll edukundonu. Any next question from the live actually? If a Canadian citizen is working in a tax-free country like UAE or Qatar, will he or she have to pay taxes for that income in Canada when filing the tax return here?
Yes.
Okay.
Because the Canadian tax rule goes by every Canadian resident should report his or her worldwide income to the Canadian tax system. Okay. So he or she has to report the tax, any income from any part of the world, as long as they're resident of Canada.
Okay, I think that definitely answers that question.
Yeah, I can add one more point there.
Oh yeah, please go ahead.
As Evelyn said, the Canadian tax is determined by the residency status. So even though this person is living in UAE or any other place of the world, but his family is still living in Canada, right? Mm-hmm. So there is a tie where the families are living here, means he still have residential ties to Canada. So he has to report the worldwide income and report and pay the income tax here.
Okay. Thank you so much. I think next question on the day is towards Krishna Kumar. So I'm purchasing a house. What kind of tax benefits and deductions am I eligible for?
Okay. So there is a new tax benefit called first time home buyers tax credit. So that means if you have never bought a property in your own name, or you have not claimed any first time home buyers credit in the last 4 years, you can claim this deduction. So this is actually a $5,000 non-refundable tax credit, which means around 15%, 15% of $5,000, which is $750. So straight away you get a credit for that. So either you will reduce your tax payment or you will get a refund. So that is the first time home buyers tax credit. You can claim that during the tax year if you have bought during the year, and you have to report that in your tax return.
Okay, I'm sure that was beneficial to all our
many people.
I think
keep it in your mind. It's not just you're not gonna get $5,000 back. Okay.
It is 15% of $5,000.
$5,000.
Yeah.
I have always people come and ask me.
$750 that you can count.
Okay. Okay, while we're on the house topic, there's another question. So this one is, will it be taxed if we don't pay back the RRSP loan taken under home purchase loan plan?
Home buyers plan.
Would we be taxed every year or at the end of RRSP 10 year? Sorry.
So if you have taken home buyers plan and you have not contributed in a particular year, then that much amount will be treated as an income in that year tax return. So it is not the entire amount, only the installment of that year. You know, home buyers plan needs to be paid back to RRSP system in 15 years. So only that year's amount will be taken into the income for that year tax return.
Okay.
I will explain you one more thing. Imagine that person has taken $15,000 RRSP loan, and over 15 years, he or she is supposed to pay back every year $1,000, right?
Yeah.
$15,000 divided by 15 years. And if that person doesn't buy RRSP in 1 year, he has to include $1,000 into his income, and he has to pay tax on that amount. And if he's not going to buy RRSP in the next, imagine 3 or 5 years, each year he or she will be adding $1,000 into his income. And that will go on for the next 15 years.
Yeah.
Until you phase out that 15 years period. Is that clear?
Yes, I think that was very clear. Any next question on the day? If I have a property worth over 100,000 overseas, would I have to mention that while filing taxes? This is, I think, towards Shajiful.
Well, yes. Last couple of years, CRA is coming more and more clear about this. It originally started in the US 5-10 years ago. Now in Canada also, it becomes very popular, and CRAs after that. Now, if you have a foreign property worth $100,000, the property could be deposits, cash, or stock market shares, bonds, or even real property, houses, anything. If it is more than $100,000, you are supposed to disclose it in Canadian tax. When you say, I have a property back home, and if you disclose it to CRA, that doesn't mean you are going to pay tax on that $100,000, okay? It's only a disclosure. But having said that, imagine you have a rental property back home, and if you are getting $5,000 rent from that property, that $5,000 need to be reported here. You're not paying tax on the entire $100,000. And again, if you sell this $100,000 property with a profit, with a much higher amount than what you bought, then you have to pay capital gain also. Okay.
Okay.
I hope it's clear.
Yeah.
So I can add one more sentence there.
Yeah, please.
There is a form for reporting that 100,000 amount. There is a form called 1135, T1135, that you have to attach along with the tax return, and you can electronically file the return. But that is very critical document. If you don't file that in time, then there could be a huge penalty. So before April 30th, you have to file this return if you are subject to that condition.
And one more thing I can add, if you fail to disclose in the last couple of years, and if you decide to disclose it now, you can go through a program called Voluntary Disclosure Program. We call it VDP. And if you file VDP, you don't have to pay any penalty for the previous years.
Yeah.
And that VDP program is still open, and it's been open for the last 5 years, but we don't know when they will close it. So I would recommend, if you are planning to disclose it as soon as possible.
Yeah, that is correct. If you are scared that you are subject to this condition, then you can use the opportunity for disclosing under the VDP program, and you can submit and regularize it right now.
Okay, I think the answer nalla clear ആയിട്ടുണ്ടായിരുന്നു വിചാരിക്കുന്നു. I'm going to go back to the UAE Qatar question. because we have a follow-up on that one. So I'll just remind you of the question. If a Canadian citizen is working in a tax-free country, will he or she have to pay taxes for that income during tax return? And follow up on it, the UAE, they can give up their residency basically. So they're willing to, they're willing to give up residency. So would that make a difference?
So what does that mean? You are reporting your income. You can still continue to live there, and your family is still living here. So that's why the tie is coming up. So if you have the income from UAE, then you have to report it here. If you give up the residency there and come back to stay here, then of course you are under the belt of Canadian taxes, and you have to report your income.
I'm not sure fully, but I think they
Is that the question, or I'm missing something?
No, I'm not sure what the person said, but I don't know if they mean they're willing to give up like residency, like living in Canada. I'm not sure if that's what they mean.
That means they are going back to their own country, right?
Okay, never mind.
They are not subject to Canadian taxes anymore.
Okay, sorry. I think that's that question. I think that hopefully answers it. Next live question was, what are the main deductibles for a person working as a contractor?
Well, contractor means whether it depends whether he is incorporated or not. And again, it depends on what sort of business. And again, it depends on how many employees he is having. There are situations where one IT guy is working at Royal Bank or TD Bank, is basically when he applies for a job, bank is asking him to incorporate income, then you can get the job. We can hire you as a contractor. But there are other people actually running the business. Both of them are having different intention, okay? One person is actually running the business, another person is not running the business. He is actually an employee, but his contract is, through a corporation. So it depends on the scenario. We have different items he can claim as deduction. Well, I can tell you one thing. Normally people go for the employment to any banks under the corporation or through a corporation. He will not be able to claim much deductions. I can tell you that, because he is still considered as a personal service business, and those guys or PSPs will still be paying similar to the same tax rate as an individual. He won't be getting that small business deduction. But again, it's more complex. We can talk about it later. If it's not that something that we can explain in 5 minutes.
Okay.
Yeah, we have to be more specific.
I just
according
have
to your situation.
Oh, sorry. Continue. Sorry.
We have to be more specific according to his situation.
Okay, got it. I think we have a very specific situation in our chat. So it says, note to my incorporated contractor friends, if you have not applied or received your 60K loan, apply as soon as possible. All applicants have until March 31st, 2021 to apply for a 60,000 CEBA loan or the $20,000 expansion. I just wanted to mention that before moving on to the next question. I hope you don't mind. Okay. Okay, so next question on the DIB. How is the donation to nonprofit dealt for taxes? How are our donation impacting tax returns?
You can get approximately up to 40% of the donations as refund. Okay. It will kick in as a benefit that will create, credit, donation tax credit. Only if it is donated to the registered charities listed with the CRA. If I am donating some X amount of dollars to any corporation or any nonprofit organization, any part of the world, no, you are not going to get. If you donate to USA, you can claim those donations only if you have income from USA. So in short, only Canadian registered charities can get you donation tax credit.
Okay, I think that answered it. Thank you so much. And next question is, what are measures you would advise to take in order to prevent being scammed? I think this was towards Shajapal. So
yeah,
think the person is talking about mostly, everyone is getting scam calls these days, right?
Mhm.
Well, I would recommend that if you get a call, listen properly, because these days even CRA agents are also calling people to make sure many things, and most of them are working from home and they are using their cell phones, and you will be getting call showing up no caller ID, but still you need to pick up the call, right? So listen to it. But if anybody is asking money, or if anybody threatens you saying that you will be deported if you don't pay, I can tell you 100% this call is not from CRA. CRA will never threaten you. They will never tell you that you will be deported. And if they're talking about a serious matter, listen to it, ask for the details, and you have the option to call CRA back. You also can ask the agent's ID of the CRA. Okay. Every CRA agent is supposed to disclose their agent ID. You can call CRA back at the number listed out on the CRA website. And you can give your SIN number. You can ask for the particular department. I got a call from so-and-so department, so-and-so matters. Is it true? You won't be getting the same agent on the phone, but someone else will be able to help you.
Okay. I hope my answer a little bit stops everyone from being scammed. But before we go on to the next question, I would just remind everyone that കുറച്ച് സമയം ബാക്കിയുള്ളൂ നമ്മള് ഇന്നത്തെ ഈവനിങ്. So if you have any more questions left, please leave them in the chat. We just have 2 more questions right now. So if you have any more, please let us know. Okay, so next question is, how can you get a copy of your notice of assessment or reassessment? This is for Krishna Kumar.
Yeah. So if you did receive your notice of assessment or you misplaced and you want to get it again, so first and easiest method is you can go to your agent if you have one, or you can get it from your My account if you have already opened a My account for your from your CRA account. Or the third case is you can call CRA and tell them that you misplaced this document, this notice of assessment, so they will send it to you in the mail. So there are multiple ways by which you can get the notice of assessment.
Okay, thank you so much. And I think this is the last question for now that we have. And this is for Shaju Paul. So what are tax schemes? And could you explain how a bad debt scheme works?
Well, honestly, I didn't understand that question much. Okay. What a tax scheme, and he's asking about bad debts. Well, I know if it is, there are corporations with the bad debts, and they can write off with certain conditions. There is a way to do that. But tax schemes and bad debts, honestly, I did not understand much. Well, if he's not having money to pay the taxes, is that what he meant? I don't know.
I think he's talking about the bankruptcy. If he has not paid back the money, then he would be claiming bankruptcy in his personal tax. So he has to approach a bankruptcy lawyer. I think that is the one, Shaju, right?
Yeah, yeah. I don't know what he meant, and honestly, we cannot talk about something which we don't know, we are not sure of,
Yeah,
right?
Okay, I think we have one question coming in live. So, can an owner of a incorporation borrow from the incorporation? If so, is there a limit on the return of the loan, like the maturity of the loan?
Well, you can go for 1 year maximum, and if it is not repaid within 1 year, then the next year, of course, CRA will be after you. And honestly, I wouldn't recommend that. Okay, taking the loan from the corporation for 1 year and repaying, no, I wouldn't recommend that. If that person is taking the money from the corporation, normally we try to report it as income of that shareholder. And loan conditions comes with, the CRA charges certain percentage of interest similar to the bank, and you're subject to potential audit. That's what I'll say.
Okay. I think I missed one of my questions. So can we show medical costs as our expenses? This was for Krishna Kumar.
Yeah. So in your personal taxes, depending upon your situation, there are various claims that you can make. One of the item is medical expenses. But there are some conditions about medical expenses. It should be for the taxpayer or his spouse or the dependent, that is the children below 18 years of age. So they can be claimed under the tax return. But there is a 3% condition. That means 3% of your medical expenses should be borne by the taxpayer. Over 3% only can be claimed. So for that, 20,000 is your income, and your 3% comes to $600. So if you have more than $600 as medical expenses, then only you can claim.
Okay.
And between husband and wife, whoever is the lower income person can claim this credit. So that will help to claim more medical expenses.
Okay, I think that definitely answers the question. And next question is, can home expenses be deducted on personal side as well if we run a small business corporation?
Yeah, if you have home office expenses, if you have a small business, you will be submitting a form called T2125. So in that, home office expenses can be deducted. So if you are paying your property tax, mortgage interest, then utilities, a percentage of that amount can be deducted in your small business home office expenses. Or if you are paying rent, certain percentage of the rent can be treated as a home office expense. Yeah, there are ways to do that.
Okay. So I think we're at the end of our questions actually. The audience side choice a question. If you want more clarity on it or you want to ask it in a different way, then please feel free to explain your questions. And until someone does that, I just like to thank the panelists for answering all questions so clearly that everyone understood it and there's no more questions left. So I think we can wait 1 or 2 minutes to see if there are any more questions. But thank you so much for answering all our questions.
It was my pleasure to be part of this evening, and I have tried my level best to give possible answers, and I hope someone is benefited from that.
I'm sure everyone has benefited from it.
Thank you so much.
It was oh, you're getting question?
Yes, I am getting questions actually. I have one person that have raised their hand, so I'm gonna unmute them, and then I have one more question.
Yeah. So medical expense, I show the question.
Oh, okay, then.
So you can claim all medical expenses, whatever prescription medicines are the prescription medicines, dental, then this one glasses, all those expenses are eligible medical expenses. There should be a prescription, not just like going to shop at drug mart and buy something is not a medical expense. So you should have prescription from the doctor.
Okay. I had actually someone, I think that really answers that question, but I also had someone raise their hand. If they want to talk, you can go ahead and talk.
Yeah. Hi. Thank you for the informative session. Just a quick question. You mentioned about capital gains taxes. Now, if we have capital gains and we reinvest it, will that still be taxed, or does that get carried forward?
So it is like second generation income, like capital gain is invested and you got interest, right? So it will be treated as a regular income, and you report that in your tax and pay tax on that.
Okay.
Sergio wants to add something?
Well, I believe if he's talking about stocks and bonds, well, the first time the capital gain comes in, I think it has to be reported. Yeah. I know that so many mutual funds, they're having X amount of dollars and they do buy and sell, it keeps going on and on. And from every single transaction, whatever the capital gain you made, they will be issuing a form, or it's called capital gain reporting, and that need to be reported. Okay, even though they bought new shares with the cash raised from the sale of the previous share.
Mm.
So it will again be treated as a capital gain, or
yeah.
Okay, depending upon the form which they are issuing.
Yeah, look at the mutual fund. How does it work? They will tell you, end of the year, they will give you a statement called realized gain and loss summary. That shows, or that summarizes each trading activities how much capital gain you made from each transaction. It could be a loss or it could be a gain. But the bottom result, you need to report as capital gain or capital loss. Doesn't matter whether you reinvested or not.
And just to clarify there, Shaju, if we have a gain and we have a loss, does that get netted off between two purchases?
Yes, I believe so.
Yeah, it is. And
Okay.
if you have losses, that can be carried forward.
Okay.
Yeah,
Thank
capital
you.
losses can be carried forward.
Thank you for clarifying.
Or if you can carry back also for 3 years. So if you have losses this year and last year you paid capital gains tax, so you can offset it. So you get some refund. So you can carry back for last 3 years.
Okay, I think we're at our last few minutes. So any ആർക്കെങ്കിലും question ചോദിക്കാനുണ്ടെങ്കിൽ please feel free to raise your hand on Zoom and I can let you talk. അല്ലെങ്കിൽ you can also just type it in the chat box. I hope everyone.
Everybody's question has been answered.
Yes, looks like it.
Looks like it was a wonderful session anyway. I'm so glad to be here to answer your questions. It was a wonderful session. Got to meet you all. I hope everybody benefited out of it.
Yeah.
I think.
Same with me.
Yes. I don't know if that. Okay. I hope everyone enjoyed the session today, learned a lot from it, and enjoyed their tea as they gained information about tax and learned all the new information. I think we have come to the end of our event for tonight. So I would like to thank our panelists again for being so patient. So thank you for sitting here patiently and answering all our questions. And to all our audience for joining us tonight to ask questions and to be here. And our sponsors for sponsoring our event.
And I want to thank all the organizers for finding me out and inviting you for this program this evening. And all the sponsors for the support and the viewers for the questions. It was lively and continuous questions were there. So it was nice for me to be part of the event in the evening.
Okay.
I'm glad came to know about MMAC. You guys are doing a wonderful job helping the tax filers, helping the community, helping everybody to have some tax knowledge. And I'm glad to know that you guys are doing a wonderful job. Okay. I'm so proud to be a part of it.
Thank you so much. I think that is the end of the event. So thank you again to everyone. Thank you for the informative session. Thank you for joining us. And that's all. I hope everyone have a good rest of the evening. Thank you to our panel.
Thank you.
Bye-bye.
Bye.